Guys, getting a little bit of a spike in crude, approaching yesterday's high, and a lot of the big gainers are energy related. Let's get to Bob Pisani. Hey, Bob.
Hello, good morning. Happy Tuesday, everybody. You know, this is what is so frustrating for investors. We had a 100-point swing in the S&P 500 yesterday. In the S&P, a 100-point swing, a notable down day, and what do we get? Nothing. No follow through at all. No clear trading pattern. No momentum one way or another. This makes it very difficult. We twisted ourselves into pretzels yesterday trying to explain the thinking of the trading community, and yet today it's like it didn't exist at all. So what happens today? As Carl mentioned, energy makes a comeback. Well, it was flattish yesterday, but look, all of the sort of cyclical stuff, reopening stuff, the energy, materials, industrials, banks, they're all the stuff that's moving up. Even REITs, which had a terrible day yesterday, moves up. Try to explain this in terms of momentum or investor sentiment. It's very difficult. Tech is flattish, by the way. One thing that is moving, and almost every single day, is emerging markets. The weak dollar is really helping these emerging markets. That's always been a classic relationship, but it's very noticeable. Here's the simple one to look at, the largest emerging market ETF, which is very heavily weighted towards Asia and parts of China as well. This is the highest level since 2007. For this, 2007. Remember that? That was the Thai baht crisis, the Asian tigers. Remember all that? Well, I was there. Most of you weren't, but it was traumatic. Now you see the big moves up again. So emerging markets is a very, very big theme for 2021. In terms of the market risk, well, nothing's really changed. We talked about this yesterday. We tore ourselves into pretzels trying to explain this. Concerns about the Democrats controlling the Senate. We'll get an answer to that pretty quickly. Concerns about the slow vaccine rollout. Concerns that may have an impact on the economy, a slower economic recovery. And most importantly, concerns about disappointing earnings. There's been some very vague fears about inflation in the second half, that recovering growth and the high debt levels would drive bond yields higher. But that's really pretty far off. I just want to show you the earnings situation because the market is anticipating a second quarter reopening, and you could just see it in the numbers. So here's the fourth quarter, $36. This is the S&P 500, the quarterly numbers, and you see how it just creeps up and starts really popping in the second quarter, and the third quarter, it really starts popping. What's it all mean? They're talking about 30 to 35% earnings higher in 2021 than 2020, and the numbers would be record in terms of total dollar amounts. And those are just the actual numbers. The whisper numbers are much higher than this. The market is anticipating a major rollout, and here you see it for you in black and white. And that's why, with the prices this high and the expectations this high, there's a lot of risk in the market. Finally, I just want to mention this rather strange decision, and David mentioned this about the New York Stock Exchange reversing its delisting decision. Now, it had decided right around New Year's that it was going to delist 3 China telecom companies, China Mobile, China Unicom, and China Telecom. They said they decided not to delist it. The only explanation they gave was in light of further consultation with relevant regulatory authorities. I have pestered them. They have declined to provide any further guidance on what their decision-making is. But I think the answer probably here is that Treasury was the one who promulgated the regulations at the request of the president, and it's not exactly clear whether companies should be delisted or not delisted. I think it's probably clear that to the NYSE, it's not clear that those 3 companies should necessarily have been delisted. A strange about face, Carl, on that, but that seems to be the obvious explanation. There's a lot of room for interpretation here. And here you see the bounce from these 3 companies, and certainly the NYSE is happy not to antagonize a big listing partner, the Chinese government, for any future listings. Carl, back to you.
Shepard Smith here. Thanks for watching CNBC on YouTube.